order filled.
What's good, everyone? Welcome back to a new YouTube video. In this YouTube video, we'll be going over exactly how I caught just over 120 points trading the 4 power 3, which was playing continuation of the daily power 3, which was also playing with the weekly power 3. So we're going to be doing an entire top-down analysis when it comes to power 3s, recapping how I made just about $6,000, technically just about $6,000, and then of course on top of that the evaluations I passed with Alpha, which for those who don't know, they're currently running a 25% off sale with the 0 accounts. So use code FEAR, you're gonna get 25% off, and the 0 accounts are no activation, so one of the cheapest in the industry right now. But anyways, I'm gonna be showing you guys the trade recording, and then of course doing an in-depth top-down analysis afterwards. So I'll catch you guys all after that.
Got off the plane to the countryside. I drove to the mountain and a hole in the ground. There was a crack on the corner and someone dead, and fire coming out of a monkey's head.
Don't get lost in their fun. They got lots of the game. Don't go over the edge. You'll make a big mistake.
Put me in a cab to suburbia. I just took a line, but I wasn't with you. There was more of it there when I got back home, but you left me. You don't know my soul. You're a
Don't get
hobo.
lost in their fun.
Yeah, you're a hobo.
They got lots of the game. Don't go over the edge. You'll make a big mistake.
Alright, per usual, first things we're going to do is go through my pre-market analysis. And as we can see within my pre-market analysis, pretty much just going over the fact that we had 2-stage SMT at the highs with no SMT at the low of the day. For those who pay attention to my content, this is almost always, I say almost because it depends on market conditions, but just about always in reference to power 3, a clear bearish bias. Similarly, I want to see manipulation beneath the true day open. However, for those who are, in fact, paying attention to Power 3 a lot, you may have noticed our daily open. Our daily open can be referenced as a devil's mark. However, when it comes to the devil's mark, it has to fit narrative of price. And how we're going to interlink the weekly Power 3 with the daily Power 3 is going to explain exactly why we failed to trade into the devil's mark. It's because our weekly Power 3 was telling us that we first need to go lower. That daily devil's mark, it did not fit narrative of price because our exchange on liquidity higher had already been rated. So there's no reason for us to return to the daily devil's mark simply because we didn't need to. And then of course the 2-stage SMT rate below it confirms that we were going to keep on going lower. And then of course our price developed right at market open. All right, so now we can get into market open. So going back to market open, the initial plan, classically within any power 3 was for our 30-minute power 3 to open at 9:30, manipulate higher. My ideal objective for the manipulation was going to be EQ, not necessarily anything too significant about it, but ideally I wanted to see price return, run out this internal structure high going into market open. Once we did that, hopefully form some sort of S&T there and then reverse and go lower. However, we can see that after market opens, we did in fact get that manipulation higher. Issue was is that we failed to run out this internal structure high, as well as failed to reach EQ. Now, with that said, we did have the proper cracks and correlations to confirm lower prices, such as trading into this 5-minute imbalance, as you can see right here. Inside that 5-minute imbalance, then running out the previous 5-minute high on NQ. Well, we can see that our correlated assets failed to. So we run out the 930 high on NQ. Same thing on ES. However, we look at YM. Initially, we'll go back and say initially failed to. The immediate previous 5-minute high at 935. We failed to run it out on YM. While on NQ and on ES right here we do. It's this 5-minute imbalance. And that has what caused price to go lower. Since we already had an official SMT at the higher of the range, we technically didn't need to form another one, and instead we just played continuation off of this lower time frame crack and correlation, a little bit different than the SMT that I'm referring to, but this in the proper time frame alignment is ultimately what had caused price to continue lower. Had I been a little bit more open-minded to this, possibility that we would not return into EQ, not run out this high, had I been a little bit more open-minded to that, the official trade format model today would have been this short right here off this 1-minute CISD. So this would have been the technical first trade that I could have taken. So that, like, for reference, this would have been the smart money reversal trade in regards to the 30-minute power 3 today. This is your 30-minute power 3 smart money reversal. 30-minute power 3 opens up, manipulates 5-minute crack and collation inside that 5-minute imbalance, and then continuation lower off of that from that 1-minute CISD. Now, of course, your TP, you would have trimmed at the low of the day for 1 to 2, and then of course targeted the what I referred to my pre-market. The, as you can see down here, was EQ of the weekly range and EQ, or not EQ of the weekly range and the 4-hour imbalance. So now when it comes to the development of the weekly power 3, we can get into what would have been our TP2, making this an actual higher risk reward trade. So the overall development of our weekly power 3, we'll quickly zoom out on the 1 hour time frame. We can see that ever since the beginning of the weekly power 3 opens right here, we opened up, immediately began to manipulate lower, and then from there we reversed, expanded higher, and we can obviously see that we aggressively expanded higher, no retracement whatsoever. That leaves behind a unbalanced range. Now, before we get into the unbalanced range, this would have been, and the other specifics, this would have been our TP2. So 1 to 4 risk reward, EQ the range, and we'll go into the rest. Now, when it comes to what had actually supported this retracement or potentially reversal, I'm still not 100% on the higher time frame just yet. I'm still open to lower prices, but with such a strong reaction off of what I was going to get into, the Q4 low. So the previous quarter's low. So when I say Q4, I'm referencing the quarters of every year. So we have Q1 of 2025, Q2, Q3, Q4, meaning October to December 2025. That is our Q4 low. And Q runs it out, ES runs it out, or ES actually fails to run it out, my bad. And same thing on YM. YM also fails to run it out. So now we have SMT with the Q4 low during Q1, and that is what had caused that expansion to go higher. Are we going to keep going higher or low from here on out? I don't know. I'm just taking it day by day, but that is ultimately what had caused the initial low of the week. We expanded, left behind an unbalanced range, and that is what we're presented with as our clear drawn liquidity for today. Our daily power 3 developed to be bearish, aggressive displacement lower, SMT at these internal structure highs, continuation lower going into New York Open. EQ the range, perfectly aligning with this unmitigated 4-hour imbalance, as well as New Log, pretty much just seeing this mix of overlapping confluences acting as a clear draw on liquidity. Because we can see that we never actually had rebalance this range. When I say rebalance, we can see that we had overall buy side delivery, meaning we had seen price run through it, this New Log, this large Nuwag higher, but we never returned into it in terms of sell side until, of course, today. And that is, of course, unbounced. Now, once we bounce it out today, well, that's a bounce out range. But beforehand, we had only seen buy side delivery through the Nuwag and no sell side delivery, which is what we had gotten today again. But that was the clear on liquidity for the day, which I posted in my pre-market. So the initial setup for the morning again was this 1 minute CISD entry. You can see right here, 1 minute CISD, TP at the EQ. And that was the initial trade for the day, which I didn't take, I missed, but it was a clear setup. Luckily, my trade came into play here, where price had reversed right before trading into the 4-hour imbalance / EQ the range. And I was absolutely blessed. I was blessed because I was so confident I was about to miss this entry. And of course, we don't want to FOMO win. We want to wait for the highest probability setups, which is something that I've been emphasizing a lot recently, is that we want to focus on the highest probability setups. Not any setup, but the highest probability setup, the one that you actually are comfortable putting risk on. And any sort of lower time frame imbalance PD rate that forms down here, it's irrelevant. It doesn't matter. What I want to see is a high probability setup, not some sort of FOMO continuation entry. And luckily, I was blessed for us to perfectly enter in liquidity right above or trade significantly higher. When I say that, I mean up into premium of the 930 high to 930 low, EQ this range of this bearish expansion range. We rebalance this range, and within this range, we can see that we form SMT with those very 930 highs right here, and again on a higher time frame, 5 minute, using the proper time frame alignments. Next candle, we form a crack conclusion with the previous 5 minute high, same way we did up here. This acted as continuation. Now again, you look at these candlesticks, these cracks and collations aren't just happening anywhere. And again, there's a very specific time frame alignment that we utilize today was the 5 minute. And we can see right here, the initial smart money reversal within our 930 New York Open, 30 minute power 3. We had a crack collation up here. We displaced lower, return up into premium. Within premium, we form another 5 minute crack and collation. We didn't form that right here. And on top of that, there's a few people, even within my group, my private group, unfortunately taking loss on this trade, which just does not make sense. We look down here on a 5 minute / 1 minute, there's no crack and collation right here. Not only is there no crack and collation, right here at the high of this range, the high of this retracement, there's no clear structure to play off of. Do you guys look at this? Do you see a clear potential CISD you can enter off of? Sure, it's all the way down here though. And if you're going to enter here, your TP is literally right here. So your risk towards, like, it's deep in the negative. You have no clear structure to play off of. No crack and collation at the high of the range. It's unfortunate that some people I saw take this. More people took the trade that I'd taken. But still, it's disappointing to see that people take this just because of FOMO. Again, you might not want to admit it, but it's literally just FOMO. You're scared of something like this happening where we retrace, again, no clean setup forms, but then we immediately sell off. They are scared that something like that is going to happen again and again and again. You cannot be that greedy, and you cannot be that fearful. You have to remain fixated on the highest probability setups. Where then we look at this. We return, form that crack calculation with the previous 5 minute high, and this time around we have clear structure to play off of. Back here, we obviously don't. It's not a subjective thing. It's just clear facts that the market is giving you. You have clear structure here. You obviously don't here. You have no shift of market structure, you could say. You have no CISD you could look to enter off of. Here, you have both. Not that I use shifts of market structure, but you have both. You have a CISD and a shift of market structure. Doesn't really matter which one you use. I focus on CISDs, but you have that there. And this was the technical entry for today. If you are properly following my model, following how I teach, this was the technical trade for today, the 1 minute CISD right here. And TP would have been, of course, at EQ / the 4-hour imbalance. And you're looking at a 1 to 3 risk reward, which is about the average for my model. 1 to 3 to 1 to 4. That's about the average that I see for my model. And boom, perfect. Everything is checked off. Only a 34-point stop loss. Everything is perfect. I had entered off of the 15-second CRSD. I'm not going to go into too much depth on a YouTube video in regards to that, but had entered off of this 50-second CRSD up here. And that obviously gave me a very, very significant risk reward, which here's the execution that, of course, you guys saw earlier, but 15-second CRSD, TP EQ at the weekly range, and boom, was perfect. Now, again, that is a general review of today's trade, and any questions, comments, concerns, list those in the comment section below, or join the server, ask in there. But overall, that is a review of how the weekly Power 3 was incorporated with the daily Power 3. And actually, we're gonna take a step back because I realized I did a poor job at explaining the 4 Power 3. It's like it's so obvious to me that I don't even feel like I had to explain it. But look at the 4-hour 10 a.m. open. We open up, manipulate higher. Again, this is clear. This is clearly bearish. We open, manipulate. There's no manipulation lower here. So everything was pointing to be bearish. Again, it's not rocket science. 10 a.m. opens, manipulates higher. We have no manipulation lower. That's a clear bearish sign. Again, it's not that hard to understand. Go over here, 4-hour, turn that on. Again, we'll go through it once more, candle by candle. 10 a.m. opens. Let's go back one more. 10 a.m. opens, manipulates higher, returns into premium, forms that crack and collation, and then boom, delivers low. Again, that's classic Power 3. That's classic open, high, low, close. And then, of course, from there, what do we do for the rest of the day? Nothing, because now we have delivered both sell side and buy side throughout the week, throughout the day. There's no reason for us to make any other move. That's why when you see price deliver to EQ the weekly range, we just start to accumulate because we have no other clear external drawn liquidity. Sure, you might think we could drop to low the week. That is highly, highly unrealistic for us to drop another 600 points on a random Thursday. It just doesn't make sense. So from there, we just ended up accumulating, slowly grinded lower, and that leads us to where we are now, which is right in the middle of that 4-hour imbalance rate and discount. Are we going to be bullish or bearish on the higher time frame from here on out? I do not entirely know. Honestly, I would be a lot more comfortable with supporting longs for the rest of the year if we can see a little bit more manipulation lower, at least generally until like the low 2300s. But of course, if we keep on grinding up higher after running out the previous quarter's low, forming SMT there, I would not be opposed either. Again, 50-50, but for now, we'll just keep taking it day by day. Hope you guys all learned something. And again, as I said earlier, comments, questions, concerns, list those in the comment section below, or join the server and feel free to ask in there. But catch you guys all in the next video.